looking back at your career, this is a question we ask a lot of people, and even ask ourselves a lot. But the times when you got something wrong or had a big call wrong, looking back, why was that, and what do you think you could have done differently? And I'm not even sure what a good example would be for you, but I'm sure you have some examples. Well, and this is more of a potentially a teaching point for people that are watching.
Sure, I think. I'd go the other way.
Yeah.
The times you get it right are probably more rare.
Right. There you go.
No, but sincerely, I mean, because the thing about financial markets, it's what makes it so hard is it's not just getting the direction right.
Yeah.
But so many investors aren't really investors at all. They're traders.
Right.
So getting the timing and the direction to be right, you got to get them both.
Right.
As you mentioned, back at the end of the 90s, certainly the way we approach the market, looking at fundamentals, looking at profit margins, looking at credit cycles, earning cycles, I mean, things were flashing.
Was valuation a metric?
But sadly, any effort to come up with sort of fair value.
Yeah, it was just
my favorite expression for that is fair value is something usually the market sort of waves at quickly on its way up, going by it, and waves at pretty quickly on its way down. I wish it were a center of gravity for market prices, but it just doesn't seem to be.
Yeah.
There's just too much human emotion, right? There, and so I think where I've made mistakes when it came to working with markets, it's underestimating how long existing trends
could continue.
Can continue, even when we think, and we might be wrong, but even when we think we've got this long list of factual information. Talking about this credit cycle and profit cycle, it plays out over and over and over. We can see these cycles happening. Go look at data, like clockwork. But it seems that you need to be in an environment of credit accelerating even as profits are weakening for quite a while before that actually translates into a aha moment and people getting more cautious and pulling away. So I think I'd want to turn it upside down and say some of the accuracy of some of the forecasts that I've been in a group that's made, those were the exceptions. Those were sort of the lucky things. Sort of once the NASDAQ broke, I think it was pretty obvious for many people to see it wasn't just going to go down a little.
It was going to really go down,
when we did some things, some of it tongue in cheek, like when telecom equipment manufacturers were selling at 100 times earnings in 1999 or early 2000, it's like, come on, we as a society, we cannot eat telecom equipment. There's just no way you could sell enough of this stuff to ever catch up with the valuation. But that didn't prevent it going from 90 to 100 to 110. Something had to break. They had to miss earnings. They had to miss earnings big. They had to sort of unveil the secret that there was a lot of vendor financing going on, that they were actually paying for their customers to buy their equipment.
They're like the bank,
and once it unravels, it tends to unravel pretty quickly. But again, that's human nature. When we really believe in something, it's hard to throw in the towel and say we didn't get it right.
So what's it? In that era, you were at J.P. Morgan. You, from what I understand, were more bearish versus a lot of the kind of consensus strategists out there. What's that like being in a large investment bank where maybe what you're saying or your thesis isn't in the best interests of their clients? Was that a kind of a tough environment to be in?
They didn't make it that way. And the head of equity research at that time, John Conti, the head of the equity business, Clayton Rose, they were unbelievably supportive.
Oh, okay. That's great.
Lots of Fridays I'd go in and say, am I okay?
Yeah.
No, because it's like, absolutely.
Yeah.
It's the stuff you're saying is very well documented,
Yeah.
right? If, there was
So they were supportive of your intellectual honesty.
the intellectual honesty, but also the J.P. Morgan of the 1980s and the 1990s really prided itself on research.
Right.
I mean, not just in the 80s, they didn't have equity research. That's how I got an opportunity to go there, because J.P. Morgan was really only allowed into the equity business.
Oh, that's right. Yeah.
During the 90s.
Yep.
But prior to them being in the equity business, there was a very strong tradition of doing very vigorous economic research, fixed income research, and so their goal, their culture was to replicate that, and so they were generous enough to sort of respect
Yep.
the process we were using to work in the equity market, and so as long as they had faith in the intellectual integrity
Yep.
of the work, where it took you, that's where it took you.
Yep, that makes
Yeah.
sense. So I guess you're now sort of teaching back at your alma mater. I'm sure you have a
Yeah.
lot of kids that ask you about how to get into the world of finance, Wall Street. What is the kind of career advice you give people they want to become the next Doug Cliggott? How do you do that?
It's really it's both easy and hard for me to answer, because when I left UMass, I thought I was leaving UMass to become an academic.
Yep.
I went to graduate school. I worked at the Conference Board, a not-for-profit
Yep.
research group for 4 years.
Were you doing economic research?
Doing it,
Yep.
right, doing economics. Actually, at a fascinating time, it was studying the interaction of monetary policy and fiscal policy when Ronald Reagan was championing a very aggressively expansionary fiscal policy,
Yep.
and Paul Volcker was championing an unbelievably tight monetary policy. So it's like, what a great time to be a student of monetary and fiscal policy. And then the phone rang and got a chance to go work in the economics group at Merrill Lynch, and it was, why would I do this? And it's like, well, because you get paid twice as much for doing the same job.
Right.
And so that's actually what I share with students, that I'm not sure I can fully explain it, but you get paid well in the financial services industry in the United States. As an industry as a whole, pay levels tend to be higher than almost any place else in the economy. So, unbelievably sympathetic to the idea of that's a very attractive place to work.
Right.
But what I try to say is, do it if you love it.
Yeah.
And
It has to start with that, a passion.
in that way, Daryl, I was so blessed that I very literally never went to work ever working on something that I wasn't really interested in.
Right.
And someone telling me that I couldn't be completely honest with what I found.
Yeah.
And no BS. I feel so blessed. I don't think there's many humans that have had that sort of career path or life experience, that they got to do something they really liked and didn't sort of get censored for doing it along the way. So I guess the first thing I try to say is, do it because you really want to do it.
Yeah.
I'm not sure it makes sense to pursue any job just for a paycheck. We all need paychecks, but there's going to be so many sort of ups and downs, proverbial bumps on the road, that it's really easy to pick yourself up, sort of dust yourself off and go at it again. If you like what you're doing, if you believe in what you're doing.
Yeah, you've mentioned at times the importance of mentors and having a mentor. Are there some people, I guess, that stick out in your past that helped you along the way?
Oh, massively,
Yeah.
massively. At the conference board, the fellow running that group, Michael Levy,
Yeah.
he was very generous in hiring me and then sort of nurturing me, teaching me how to read federal budget documents, how the federal budget process works, how the Fed works. So, yeah, as someone in their 20s, learning a lot about the mechanics of actually how those things work, it's a blessing. A lot of folks are still trying to figure that out in their 50s.
Right.
And, then at Merrill Lynch, probably the most important mentor I had is a fellow named Chuck Clow.
Okay.
He
okay, yeah.
runs Clow Capital up
yeah.
in Boston
Yep.
now. Same thing. I mean, yeah, I was kind of learning how the economy worked as a 30-year-old,
Yep.
but he sort of nurtured and showed me so many ways to connect the dots
Right.
between economic data and market data and earnings data.
Yep.
So I guess I'd put Chuck very much up at
the top. Yep.
the top of that list. And maybe for young people, and again, this is what I tell the kids out at UMass, that you usually need one of two things. You either need to go to work for a great firm,
Right.
or you need to have a great mentor.
Yep.
Sometimes you're unbelievably lucky and you get both.
Yep.
And that's happened to me a couple of times. But if you can just get one of them,
That's a huge advantage,
then
yep.
it's huge because there's a lot of hardworking, bright people out there
Yep.
that just don't get a chance to succeed because either the firm they're working for isn't a great one,
Yep.
or they don't have an individual that's like, okay, I'm going to really make sure,
Training them and
yeah,
championing
that
them.
you
Yep.
have a chance to succeed.